Buying the jet is not the deduction. Basis, placed in service, bonus depreciation, and the 50% bonus use trap. Hello, this is Forrest Owens. I'm an aviation lawyer, a private pilot, and an FAA licensed airframe and power plant mechanic. Let's begin with the first tax mistake people make with large turbine aircraft, because it is also the most expensive. They often think buying the airplane creates the deduction. It does not. The tax result turns on basis, business purpose, placed in service timing, and documented use after closing. For large turbine aircraft, that distinction matters enormously because the numbers are large enough to make timing errors painful. The buyer may sign for a Gulfstream, Global, Falcon, or Challenger in December and assume the aircraft is immediately depreciable. But for federal income tax purposes, depreciation begins when the aircraft is placed in service for its assigned business function. That is a legal standard, not a celebratory one. Here is what you should keep in mind. The wire transfer closes the deal, but it does not necessarily start the depreciation clock. The placed in service problem is not academic. In Brown versus Commissioner, the taxpayer purchased a Bombardier Challenger near year end and wanted bonus depreciation that year. But the aircraft was still undergoing modifications the taxpayer himself characterized as necessary for its intended business mission, including interior and equipment work. The tax court held that the aircraft was not placed in service in that earlier year. The case is a warning to every large cabin buyer trying to race the calendar. Delivery, title, and even some actual flying does not always mean the aircraft is ready and available for its specifically assigned function. The next issue is listed property. Under Section 280F or 280F, aircraft used as a means of transportation are listed property. That means the taxpayer does not get the same forgiveness that sometimes exists with ordinary equipment. The substantiation rules are tighter. The business use percentages matter more. And accelerated methods can be lost if qualified business use falls too low. For large turbine aircraft, the 50% threshold is a critical planning point. If the aircraft does not satisfy the requirement level of qualified business use, accelerated depreciation can be limited, and prior depreciation may be subject to recapture. In other words, the tax problem may not appear only in year one. It can arrive later, after the owner has already celebrated the deduction. That is exactly why flight log integrity matters. In Linsford versus Commissioner, the taxpayer claimed airplane deductions in prior year 26 USC Section 179 benefits, but they could not substantiate the business use the way the code requires. The result included disallowance and Section 280F recapture. Linsford involves a smaller aircraft, but the principle becomes more severe, not less severe, when the asset is a multi-million-dollar turbine aircraft. Owners also need to understand what current bonus depreciation planning really means. Current IRS guidance states that eligible depreciable property acquired after January 19, 2025 may qualify for permanent 100% additional first-year depreciation, while taxpayers in the first year ending after that date may elect 40% instead, or 60% for certain aircraft with longer production periods. That is powerful planning territory, but only for property that actually qualifies. The existence of favorable bonus depreciation does not relax the placed in service test, the listed property rules, or the need to prove business use. You should keep in mind that the schedule of depreciation does change frequently and should be checked with specificity for each aircraft. There are many sophisticated buyers that go wrong here. They spend all of their pre-closing energy on purchase price, sales tax, and registration, but too little on the federal income tax architecture that has to survive an IRS exam. Who is the taxpayer? What is the aircraft's assigned business use? When was it truly ready for that mission? What documents prove that? How will personal, entertainment, deadhead, charter, and maintenance flights be classified? If those questions are answered late, the tax return is often doing cleanup instead of reporting a well-built plan. There is another large turbine wrinkle here. Basis is not just the invoice price. Owners need to sort capitalized acquisition costs, completion center work, aviation upgrades, imported equipment, and later modifications carefully. A jet can be delivered in one configuration, modified immediately, and used under one operational model while being reported under another. That is fertile ground for error if accounting, legal, and flight operations are not aligned. So, what is the practical strategy? First, decide before closing which entity will own and depreciate the aircraft and whether the entity has the right economic activity to support the position. Economic activity is something to carefully consider. Second, define the aircraft's specific business function in writing. Third, document delivery, readiness, crew status, required modifications, and initial mission availability. Fourth, build a flight record system that captures not only dates and passengers, but also the tax characterizations of each leg. And fifth, stress test the qualified business use percentage before the return is filed, not after an audit notice arrives. Keep this in mind. In aircraft tax planning, the most expensive word is not purchase, it is proof. In short, the first common IRS issue with large turbine aircraft is that owners often confuse acquisition with qualification. But the tax law asks harder questions. When was the aircraft placed in service? Was it used in a sufficiently documented business manner? Can the taxpayer prove without restructuring the story later? Planning is key. And here is the takeaway, something to remember. On a large turbine aircraft, the deduction usually belongs to the owner who planned the records before that first flight. Thank you for your interest. This information is provided for informational purposes only and is not legal advice. Please direct questions to admin@aviationlegalcounsel.com. We look forward to helping you navigate these issues with precision.